It's 9 a.m. in New York, 2 p.m. in London, 9 p.m. in Hong Kong and Singapore. Wherever you are in the world, welcome to this week's InsurTech Insights webinar on the topic of cyber insuring the intangible. Welcome and thanks for dialing in. I'll ask our expert panel to introduce themselves in just a moment. But first of all, just a reminder of the HATS rules. How does this work? If you haven't been on one of our webinars before, please feel free to introduce yourself. You'll see the chat panel on your screen. Go ahead, type into chat panel, let us know where you're from, where you're dialing in from today. And you'll also notice the Q&A panel. That's your opportunity to pose questions directly to our panel of experts. You also have the ability within the Q&A function to upvote your other people's questions, and we'll take the most upvoted questions towards the end of this session. I've been really looking forward to this topic today. It couldn't be more timely. I was just chatting to our panel just before the start of the webinar. There's been so much news about cyber, even in the last few days. We've heard about the pipeline that's been unfortunately had to shut down in the United States because of a cyber threat, a ransomware threat to be specific. So I'm so looking forward to this conversation. Let me actually not introduce, but ask each of our experts to introduce themselves, beginning with Betty. Welcome, Betty.
Good morning, good afternoon, or good evening, wherever you're joining us from. Hope you had a good everything. I'm Betty Shepard. I head up the Cyber Risk Division at Great American Insurance Group. Great
to have you, Betty. And hello to you, Paul.
Hi, I'm Paul Guthrie. I'm the co-founder and EVP of Envelop Risk, which is a cyber reinsurance agency. And one of the things that's unusual about us is that we have an in-house team of analysts that we think are quite good, that are constantly monitoring the global threat landscape, as well as monitoring about a million companies and changes in the attack landscape.
Great to have you with us, Paul. And welcome, Matthew.
Hi, everyone. Matthew McKenna. I'm President of International Operations at SecurityScorecard. SecurityScorecard is a security ratings provider monitoring over 5 million companies around the world continuously and their cyber risk posture.
Welcome, Matthew. And thanks so much, of course, to SecurityScorecard for making this week's webinar possible. So let's get into the first topic. But before I invite our presenters to debate the topic of which are the greatest risks in cyber today, let's try a little poll. Let's turn the attention to you, our audience, and I want to ask you a question. Does your organization offer coverage? I'm assuming most, if not all of you, work for insurers. If you do, then does your organization offer specific coverage for ransomware? Please start voting. Hopefully everyone can see this. Please start. As you can see, the votes coming in. Do you offer it? Do you offer it? The votes are coming in. Yes is at 40%. Okay, a mixed bag actually. Mixed bag of yes and no's. Pretty mixed across the board. I'm going to give this a few more seconds and get to about 30 responses before I close the poll. Okay, 10 more seconds for a few final responses. There we go. Let's close the poll. Okay, so the results of the poll. 48% of those who responded say yes, we offer it today. A further 23% say we plan to. We don't yet, but we plan to. And 29% say no, we don't offer it, and we have no plans to. So it's no accident that I chose to specifically ask a question about ransomware, perhaps because it's top of mind because it's been so much in the news. But let me turn back to the panel. What are the greatest risks today? How have risks evolved since cyber as a category of insurance has emerged? And do we foresee any other types of risks coming in the future that perhaps aren't as visible today? Let's start with you, Betty. What are your thoughts on this topic?
So, Stephen, you hit the nail on the head. The greatest risk at this moment in time in cyber is ransomware. Certainly did not start out that way. Back, a few years ago, less than 10 years ago, the greatest risk that companies were facing were data breaches and all the, working through the regulatory landscape, patchwork of regulatory, especially in the US, requirements around personally identifiable information. That has definitely been completely thwarted and dwarfed as compared to what we are facing today in regards to ransomware. When I first started working in this line of business back in 2002, cyber extortion pretty much was always a part of the coverage, a small subset. And when I would explain the coverage of what is meant by cyber extortion, I would say, "Oh, think of it as kidnap and ransom for your data." Ha, 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 ha. And it turns out that's exactly what it is. And there's a lot of money to be made, unfortunately, by the bad guys in kidnapping your data and holding it for ransom.
Thanks, Betty. Paul, let me come to you. You monitor a million companies. Would you agree that ransomware is really the greatest risk today?
Yeah, I mean, there's a couple different ways of thinking about that. So the answer is yes. And that is the most common tactic right now. And I think it's incredibly interesting, I think, just to unpack a little bit of the philosophy of ransomware and to think about it historically, and then kind of speak to some of the underlying dynamics that are maybe that are underlying those risks. So if you look at what ransomware does historically, it used to be back in the day when people were just going for data or trying to steal money directly, you're effectively looking for something that you can convert into cash very quickly. Whether it's credit cards or whether it's medical records, those were all assets that could be made very liquid very quickly, because that's what people are after. Nobody's after your personal data just to find embarrassing things about you, right? It's all just about cash. And so what ransomware does effectively is that it turns a business interruption event into something that can be turned into capital immediately. And that's reasonably new. This is not my own anecdote, but it's something that somebody said to me that, imagine 10 years ago you hack a candy factory and now you have control of their industrial systems. Well, what are you going to do with that? Are you going to make a poisoned batch of candy? And if you are, how are you going to do that? And if you are going to do it, it turns out you need to know a lot about manufacturing candy to even figure out the first way to actually do that. So it was a worthless thing to do. But now if you can take control of that system and you can hold it for ransom and you can very easily convert that into capital, then you're really winning. And so what are the factors underneath that are really driving that? I think the primary one, apart from the fact that every area of economic activity always has some crime associated with it, and that can ebb and flow, depending on how new or how old those areas are. But I think fundamentally what's driving ransomware right now is really political instability. So there's kind of overall, everyone's aware of what's happening globally politically. There's a lot of incentive among certain actors to try to undermine a lot of economic activity. Some of the countries that are participating in that are some of the countries that are producing the most cyber talent, and they're effectively endorsing a lot of that cyber talent to organize as gangs that can be quite sophisticated, both technologically and economically, and they're sanctioning that behavior and certainly not regulating it. So the actors are really out of control. And that has made ransomware kind of run out of control. I think the last thing I'd say is that you can overstate a little bit how severe this risk is. I think that it is very severe, but there are likely to be controls on it in some ways. The hackers who have taken over the pipeline, they're not complete anarchists. They have some principles in terms of who they will hack and who they won't hack. There's always parasitic type behavior where you're looking to steal as much as you can without changing the fundamental cost functions of the host and not kill the host. And so that puts some controls on it. But overall, this is something that right now is kind of increasing with very few breaks on it, and is the main risk today.
Thank you so much, Paul. That's some really rich context. Matthew, over to you. At SecurityScorecard, you also monitor a lot of organizations. You look at a lot of risk evaluations. Where in your opinion, are the greatest risks, and how have they and will they evolve?
Sure. So, I mean, we can all kind of come to the same conclusion that over the last 12 months, our world has changed rapidly in the evolution of remote working and the digitalization of our environments, right? So we as a security ratings company, we're also looking for those trends which are most likely to indicate breaches, right? And so ransomware is a little bit of an after the fact type of indicator, similar to malware. It means that you've already been breached, right? So we have to take a step back to look at what's causing these let's say, weaknesses in our digital exposure that's permitting these type of events to happen, right? And so phishing is, of course, the obvious attack vector, which we're seeing increase rapidly directly after kind of COVID hit us last year. Massive typo squatting of COVID-related domains to go phish organizations. However, the indicator that we're finding more and more prevalent is around misconfiguration, right? As we're moving dynamically into DevOps environments, we're publishing applications at a quicker rate. We're less careful with our cybersecurity because business is still driving the pace at which we're releasing new applications, right? So we're seeing a massive increase around, web application misconfiguration, these type of areas. Another high correlation between breach likelihood and indicators that we see relate to outdated web browsers, outdated operating systems. So again, this is a risk as we move more into remote work environment, how those organizations maintain that patching discipline overall to ensure that they're not susceptible to these type of ransomware scenarios, phishing scenarios, right? And then the final piece that I'll put on this is, if we think how malicious actors have been evolving, they're functioning much like businesses. They're extremely organized. They share information super effectively, and they're able to automate attacks, right? So we have this thinking always of these attacks where someone's inside the network for the last 6 months and they're snooping around. Yeah, these are the worst case scenarios, right? We saw SolarWinds happen, but the majority of the attacks are hit and run, still 1-2 steps before that data breach occurs, right? And this correlates itself nicely to the concepts of ransomware and these type of attack scenarios.
Thanks for that, Matthew. So you've outlined a number of things there. And one of the key points that I'm hearing is that things are moving really, really quickly. The types of breaches, the types of risks are evolving very rapidly and likely to become even more rapidly evolving in the future. In your opinion, Matthew, are insurers responding as quickly as they need to be to respond to these new types of evolving risks?
Well, I would say it's tough to me to comment from the insurer side, not being from the insurance space. However, working closely with the carriers, we see that they are moving in many respects. They're trying to move as fast as they can. We see a lot of exciting developments in terms of data modeling around concentration risks. When we're interacting with the carriers, they want to understand what's behind all these IP addresses that we're seeing, what type of services are companies using to help them more effectively build out their data modeling along the way, right? So I think it's more about the question of how do we educate the market more effectively, right? What things can we be doing to educate the end consumers of policies and customers more quickly? And that's where, let's say, insurance companies and, let's say, cybersecurity players, as well as the customers, need to be teaming up more closely to be able to address that.
Thank you, Matthew. Betty, let me ask the same question of you, if I may. Are insurers moving quickly enough? And in fact, a follow-on question, if I could add, what are the implications for insurers with all of these new risks? Ransomware quickly. What does it mean for insurers?
So, there's a lot of things that's happening in the insurance space, and I'll just kind of piggyback off of something that Matthew said. Insurance carriers or insurers writing this on a primary basis have to be kind of part-time technologists, right? Information security specialists, right? Where I'm just an insurance geek. I can talk about retro dates and, extended reporting periods all day long. You have to team up with someone like Matthew, who, as a matter of fact, Great American is a SecurityScorecard customer for a very long time, and utilize some kind of expertise in an area where insurance professionals just aren't there yet, right? So, in order for me to kind of look at a risk from a holistic perspective, I have to have a really good insight into the digital or technological ecosystem of an insured. We can't discount human error, right? That's always going to be part of the equation in insurable events. But this adds another level of technical expertise that really underwriters have really kind of trying to play catch up in understanding the threat vectors. And part of that is the threat vectors are moving. They're moving very quickly. They're a moving target. And so when you think you kind of figure out, I'll take it back to data breach, when that was the biggest thing that everybody was trying to recover from. you can kind of understand how information is protected, or personally identifiable information is protected, who you give it access to. Well, now we're talking about ransomware, and what does that look like, and how can somebody get in? And those are the questions that a vendor like SecurityScorecard really helps us answer.
Thanks, Betty. So you talked quite a bit about ransomware. We talked a little bit about other risks such as misconfiguration, outdated browser technologies, and so on. Paul, if I could ask you, have we missed anything in terms of those emerging risks? Is there anything on your horizon that we haven't talked about yet that we should be?
I think kind of to make an excuse, I'll say that, part of the answer to the last question is that insurers need to be incredibly intelligent about how they rate and rank different companies, and they need to be incredibly intelligent about offering guidance to the market in terms of what they're seeing from a macro level. Because if you want to understand what are the events that are actually happening, insurance is the best resource for that. If you're looking at the insurance claims, that is the best data set in the world in terms of who's actually getting hacked and what are the consequences. It's not complete, but it's pretty close to complete. But at the same time, it is not the insurer's job, and I don't think that it should be in cyber. I think it can be in other lines of business, but I don't think that it's the insurer's job to pretend that they are an outsourced CISO. It's just far too complicated. It changes far too fast, and you need real expertise at the company level. So all that having been said, Matthew, I have no qualms about what he said. He's clearly looking at the data and quite an expert in there. I think from our perspective, some of the elements that we look at that we think are the most interesting in terms of providing the best handle on whether a company is quite risky is making sure that they have backups, typically triple backups, offline and online, making sure that they use two-factor authentication, that they're encrypting their data, and those kinds of things.
Thanks. I just want to stay on the ransomware point, just because I think it's so topical at the moment. Another story that's broken just in the past couple of days out of France. I gather AXA France has now said they are not going to pay out claims from ransomware victims who've actually paid the ransom. That's really interesting in terms of raising the question, what's covered and what's not covered. What do you make of that, Betty, as another insurer? What do you make of the implications of AXA's move and AXA's announcement, and what does that mean for insurers and how they deal with ransomware in the future?
So, I think it's a twofold problem to solve. It's not just the insurance industry's problem to solve, is whether or not you're going to continue to pay ransomware events, right? Insureds and organizations' own internal infrastructure needs to be a little bit more responsible about how to protect their most biggest asset, which is information, from the bad guys, right? And until we can kind of come to a meeting of the minds, it just can't be a risk that's 100% transferable. It's not sustainable in the insurance industry to continue to pay ransom demands, right? And I don't think it's going to, and you're seeing that in the US with, some carriers introducing sublimits, co-insurance around specific ransomware payments. But to Paul's point earlier, to pick that up again, the ability to recover from a ransomware event is what underwriters at this moment are very much focused on. There's still a lot of costs involved in a ransomware event because the forensics can be astronomical. But if you're not having to engage and pay that ransom payment, that takes a big chunk of the loss out of the equation.
Thank you so much. Let's move on to our second question. What are the trends underpinning the development of the cyber insurance market? I think we started to cover off some of those trends already, but let's spend a bit more time on that. And how are insurers responding to these trends? But before we go to our panel, let's do another poll. Let's come back to you, the audience. And I want to ask you a question, and I probably need to explain the meaning behind this question. Is cyber a vertical or is it a horizontal? Let me explain what we mean by that. I think this is one of the interesting trends that is coming through, and one of the big questions that's being asked. Is cyber a product category, a vertical product category? Is it its own type of insurance, or is it a horizontal that touches other categories? So is cyber, for example, a branch of professional indemnity within commercial insurance? Is cyber a branch or a bolt-on or an add-on within other property and casualty lines. Okay, so we're getting some views. A lot of support for horizontal, not so much support for vertical. And it's fine to say I don't know, by the way. I would expect a lot of people don't know, and to be fair, none of us know. That's kind of why we're having this conversation, because it is kind of a vertical and it's kind of a horizontal. Okay, thank you for the votes. I'm going to give 5 more seconds for more responses to come in. All right, let's close the poll, and the results are in. 43% think it's a horizontal, 36% think it's a vertical self-contained product category. That's interesting. So pretty close results there. And then 23% don't know. Let's come back to the panel. And again, I've kind of preempted the conversation. So let me open it back up with the question. What are the trends underpinning the development of the cyber insurance market, and how are insurers responding? Let me start with yourself, Matthew, if I could, to call out what you think are the big trends.
Well, I would say a couple of areas. And again, I'm talking from the perspective of how we see carriers applying security ratings to help their businesses and their challenges. So on the one side, again, as I mentioned, education remains a big issue, especially if we start to look at the SME space, right? So small enterprises, they're already struggling with managing IT infrastructure. Understanding cyber insurance policies adds additional complexity to their business, right? So one of the things that we've been doing with security ratings is working with carriers on helping them build connections into their lead generation and lead flow, which will essentially the usage of things like LinkedIn ads, Facebook ads, to provide a point where their customers can come back into a landing page, be educated, find out information about policies, but at the same time, gain an understanding at what level their cyber risk is at, and get a translation from that technical language back into that more common language, business language that they would understand. I think a big thing here, what we're trying to solve together with the carriers, is how do we make that whole process, especially for the SMB space, how do we make that as low touch as possible, right? The margins are already really, really tight in the SMB space. So we have to make that as automated as possible, from first touch to click to purchase the policy. So really a lot of automation is one of the things that we're seeing in terms of that engagement just on the SME side. I'm not really talking on the enterprise side at this point.
That's interesting, Matthew. Let me probe you on that, if I may. Are we still very reliant on policyholders, SMB policyholders, to supply information? Are we still asking them to give us information, or can we start to bring in data from other sources without asking people?
It's a great question. We ran actually a pilot on this together with a couple of carriers, and what was really interesting is that you start to get really high drop-off rates the more questions that you answer. So you want to be able to look at it from the point of, how do I get them to engage with me, from the minimal answer, right? So first name, last name, email address. I now know your company, generate that scorecard, and a couple other things, right? Once those questionnaires get pushed out, right, which is a normal part of the process, and actually that due diligence is extremely important for the carriers, right, to make sure they're underwriting something sensible. It has to be, again, kept simplified, and it has to be things that the customer as an SMB is capable of responding to in a sensible way, right? So the more information we ask for, there tends to be a higher drop-off rate in that engagement.
And can you point towards any particular kinds of data that we're beginning to able to capture and enrich without the need to ask the question?
I mean, from the outside, and this is again why it's very useful in the carrier space. From the outside, right, we can gain insights into their network security. We can get insights into their patching governance. We can get insights if they have a lot of leaked personal information, or if they've experienced data breaches, right? We can look at their application security. So a multitude of factors can already give us that picture. But the point is, and this is also the understanding from the carrier side, is that risk from the outside is not the whole picture always, right? Your house can look terrible from the outside, but you have a beautiful inside, very nicely furnished, right? And so it's, how do you capture that inside balance to understand what you're actually underwriting?
Absolutely. Very interesting. Thanks, Matthew. Over to Paul. Same question, Paul. What are the big trends and how are insurers responding?
Yeah, you can answer that question on so many levels. And Stephen, I thought I love the question that you put up right away, because I think you got at one of the by asking that question, you kind of introduced one of the core trends. So is cyber a vertical or is it a horizontal? And the obvious answer is that it's both. And the reason that it's both is that we have policies that we call affirmative cyber policies, where you're specifically insuring against cyber attacks with certain parameters. But of course, we all know that there's cyber in almost every other business area. And that's a problem. And so the industry is doing its best to try to corral all of that risk into affirmative cyber policies. And that's an incomplete process that maybe can never fully be achieved. And so, in other business areas, look at the recent class that you've seen. Who knows how much of that's insured? Some of the biggest. Oops, there's a little bit of interference. A lot of the biggest, marine issues have had a cyber element to it recently. I think about a third of directors and officers insurance is cyber. Obviously, a lot of E&O is cyber related right now. So you just see kind of cyber really either bleeding into all these other business areas, or you see cyber becoming really important to all these other business areas. So should cyber be a $6 billion market right now? It should probably be about a $100 billion market right now. If everything was actually being insured. And it's obviously absurd that you would ever get that amount of capacity that you could deploy intelligently that quickly. But suffice it to say that there's a huge amount of uninsured risk all around the economy in kind of every different area. So the reason I think that that's an important thing to consider first is because the trends underpinning the development of the market on the demand side are the obvious trends that we all see, which is that the world is becoming cyber physical. So your car is becoming autonomous, maybe not in the next 5 years, but in the next 20 years for sure. Your house is becoming a smart house. All the buildings that you work in are getting integrated with those tools. And on and on and on, right? Your refrigerator maybe speaks to the internet already. So this means that we're more and more reliant on the safety of cyber physical systems, and cyber physical systems are becoming the world in which we live. So part of the reason that we were so interested in cyber when we started Envelop Risk was just this issue. A number of the members of my founding team had done a lot of work with Lockheed Martin at a very senior level. And we had seen that fighter jets, 80% of a fighter jet is software right now, which is crazy. And of that 80%, about more than half of that is just software verification and validation, making sure that there's no bugs in the system and also making sure that the system's really secure. So something that you think of as the ultimate physical system is actually much more like a laptop than it is like a Spitfire. And that's happening to the whole world, and that's really interesting. So and it's a very wicked hard problem. It is not something that is ever going to go away. So, corporations are putting more of their data, their intangible assets in cloud systems, in servers that are local, whatever it is. Business operations are much more reliant on cyber systems. So this is the major trend, and this is a really, really big issue for the future of insurance and the economy in general. It's much bigger than this, little $6 billion industry right now. So how are insurers going to respond? This is an ongoing problem that will last for 40 years.
Fascinating, and you're so right. If this is the inevitable consequence of the progress of technology, as our houses, our cars, everything that we use, down to our washers and our fridges, become more technologically advanced, have more code, are more connected. As everything is connected to each other, it exposes this whole new category of risk. Is that something that you're seeing, Betty? This whole idea of things becoming more connected, therefore new risk categories are coming into play. How would you see that?
Absolutely. And, just when you first kind of asked me this question and spent some time thinking about it, I didn't really need to spend too much time thinking about it, because by and large, without a doubt, the trend underpinning the development of the cyber insurance market is technology, our dependence on it, and the connectivity that it provides. And to Paul's point, I 100 absolutely % agree. The fact that cyber is both a vertical and a horizontal. At this moment in time, it's being treated as a vertical, and it cannot be. That financial harm to an organization is covered under many different disciplines of insurance, right? D&O, E&O, Paul mentioned a bunch of them. But the simple fact is a cyber incident is a peril, not necessarily a specific answer of an insurance industry segment and a vertical perspective. There is a vertical place for cyber risk insurance, whether that remains to be a liability only or potentially some first party coverage. Right now, it's acting as kind of like putting the finger in the hole of all the other dams of insurance that aren't covering. Bricking, for instance, that's a property damage. A cyber incident causes harm to computing network, computer hardware is a property damage, right? Potentially the water supply, a cyber incident causing bodily injury is not something that cyber risk insurance currently picks up, although you have snippets of it in different marketplaces kind of trying to pick some of it up. Financial harm to third parties, that's really kind of where the crux of cyber started, but it's picking up all these other types of things. You know, hacking into someone else's network is a crime, but yet it's not covered in totality under a fidelity policy. You know, theft of money is something that both the fidelity market and the cyber market have grappled with, and neither have done well at, quite frankly. So I think it's incumbent upon the insurance industry to figure out the delineations, but also recognize the verticals in the fact that cyber will reach cyber will reach every insurance product out there, and how to underwrite to that is really the proximate cause of a cyber incident, causing bodily injury, causing property damage, causing theft of money. How do we solve for that, I think, is the million-dollar question.
And Betty, some of the things that you brought up are just so interesting in terms of a lot of these things are crimes. And
absolutely.
Imagine if you had $100 stolen from your house, you would call the police immediately. If you had $10,000 stolen out of your bank account, if you called the police, they would just laugh at you. There would be nothing that they could do. They're not equipped to that.
Correct.
They don't even think of it as crime. You're completely on your own, which is crazy. And also, and from a national security standpoint, a lot of the attacks on corporations are not exactly acts of war at all, but they have the character of rivalries between nations to some extent. And most nations have taken the view that they cannot provide a national defense for this. And so they'll turn over the defense to the corporate world. So a lot of what they know that theoretically they should be the ones defending, like your tax dollars should be paying for defense, but it's impossible to do that practically. So we've turned it over to the commercial world. So it is kind of interesting. We're talking about insurers, and we're talking about cybersecurity firms, and we're talking about firms themselves. There are entities that normally regulate and restrict this behavior, which are like police forces and militaries, and they have signed off on not participating in this field. And that is quite interesting. So whenever you're talking about the role of insurers, it's important to kind of keep that in mind, because insurers can't do everything here. And cybersecurity firms kind of are the ones that need to, but also they can't do everything because they have limited resources that they're getting from operational firms who themselves don't, in other perils are not always 100% responsible for defending themselves.
Just to add on to this is a very interesting topic. I think it even goes one more step or level of insidiousness, is that if we start thinking that 2/3 of all breaches occur as a result of a third party in our supply chain, you're now distancing that relationship even more. So now, how do I ascertain that and understand that this breach occurred because of this third party and prove that back to my carrier here, right? So we look at the current Colonial breach here, right? That is a supply chain disruption along the way. How far will that roll back actually into the supply chain where that started from?
Well, even if you want to kind of look even deeper into that, Matthew, look at SolarWinds. That was absolutely a supply chain attack that if I'm experiencing it and if FireEye didn't come out and say, hey, we knew about this, but yet I updated the patch as I'm supposed to, because I'm making representations as an organization that's what I do. And unbeknownst to me, I'm kind of, infecting my system at that moment in time. How do I prove what happened and what the attribution was? It's such not an easy thing to solve. It's quite delineated. There's quite many different dimensions here.
So attribution is something I learned from you, Betty, and it kind of blew my mind actually as a concept. And And the second thing I learned from you, which also blew my mind, was that ransomware as a service is a thing.
It is.
You can buy it. It's such a great discussion, but I'm going to move it on. I'm going to move it on. We've got one more question. By the way, thanks to everybody for the great chat, for the great cute questions. Keep them coming. Keep chatting away. Tell us who you are, where you're from in the chat panel. Keep the questions coming in the Q&A panel. We're going to take a few questions before the end of the webinar. So the third topic I've got here is for our experts. How do we accelerate growth in the cyber insurance market? Who takes the lead? I think we've started to talk about that. It's, as Paul, you very, very sagely point out, this isn't just an insurance problem. It's a bigger societal problem. Let's go with the poll. I've got one more question for you. So the question is, in your opinion, do potential customers have a good understanding of cyber insurance? Do they have a great understanding? Do they have a fairly good understanding? No, they don't understand it very well, or no, they don't understand it at all. Let's go. Put in your votes. How well do potential customers understand cyber insurance? We've got no votes for yes. We've got 70% voting no, not a very good understanding, 25% voting no. We've got one vote for a fairly good understanding. I think the answer is pretty overwhelming. I'm just going to give it 5, 4, 3, 2, 1 seconds for a few more responses. The responses are in. 81% of us say no, customers don't particularly understand it. 16% say customers don't understand it at all. One person says customers have a fairly good understanding, and nobody thinks customers have a good understanding of cyber insurance. Again, I may have just preempted the conversation, but let me bring it back to our experts, and I'll come to you first, Betty. How do we accelerate growth, and who's responsible for leading the way in cyber?
Well, I mean, how we accelerate growth is making it a little bit more simplified, right? The policy language that is commercially available now is just way too complicated for, especially an SME, to understand, right? If you don't understand what's covered, why do you want to buy more insurance? It's kind of as simple. No one is in the business, creates a business to buy insurance and make sure that they have all the insurance they could possibly need or want, and then to determine that, oh, it's not covered. What do you mean it's not covered? What do you mean it's a co-insurance? So I think, cyber risk insurance has tried to become all things to all people, and it needs to be a little bit more simplified, however possible. I mean, the product that we put out at Great American is really out-of-pocket costs, that's the loss, and liability to third party, that's liability. There's lots of other kind of ways in which the policy is triggered, or different pockets of coverage that an incident may trigger. But to have a policy that's 70 pages long, I just don't think is the right way to educate the end buyer on what it is they're buying.
Thanks, Betty, and I think you've just also corroborated the results of our poll. Simplification. What are your thoughts, Matthew, on growth and growth drivers?
Right. So again, I think the discussion has to start with the customer, right? And I have these discussions as well directly with customers. I can use a great example of, I have a friend who runs a fitness studio chain down in Germany. I provide them their scorecards. They have a cyber insurance already. And I say to them, here's all your issues. You have a lot of open issues. Why don't you go fix them? And they say, because we don't know how, right? So it's that connection. The policy is one thing. They can get through the policy potentially, but then do they have the skill set? So without being non-transparent about it, I think the big prize for the cyber insurance industry is getting SMEs to underwrite, right? There's millions of SMEs out there, and being able to make this a very quick process, because if we see that the majority of those breaches are coming from the supply chain and those that are easier to attack and don't have the resources to protect themselves, that's where we have to start to protect, right? So I see that these services have to be bundled in together with providers, that it is simply kind of like when you're buying your cable package, that you're buying several things along the way with it, right? How do we bundle this together in something that's more digestible and understandable, rather than getting caught within the complexities of the policies and everything that's covered, right? So the discussion has to be very much simplified, right? If we just look at one stat point, is an SME, usually about more than half of them will go out of business within 6 months after experiencing a cyber breach, right? That alone should be motivation enough, but it's still not, because we're not able to effectively create that connection between the technical issues that they face and the risk transference that they're getting from the policy there.
Thank you. Two very strong points of view around customer centricity, simplicity. Paul, what's your view?
Yeah, I'll agree. I'll agree, but add a really big twist, which is that I think that cyber insurance. I often compare it to the restaurant where the food is really bad and the portions are too small, or maybe say that it's like Microsoft in the 1990s where everyone hates it and it doesn't work all that well, but everyone's buying it. And if you look at the industry, it is not at all. If you sell cyber insurance, you're filling your book. The constraint on the market is capacity. So there's just not enough capacity coming into the market. And the reason for that is there are not good enough capital models that can justify an existing insurer or reinsurer from putting capacity into their underwriting program. There's not enough history that allows insurers and reinsurers to look at this industry area and decide, oh yeah, this is going to be safe over a 10 or 15 year period. Everyone knows that they can do pretty well in year one or year two. And so as a consequence of that, there's not as much competitive pressure on the customer side as there might be. And you can make fun of the insurance industry for not being innovative enough, for not being customer focused enough. All of those jokes are true. But at the same time, there could be more new entrants into the industry that are really changing that. There are some new entrants that are really changing that. But what is really, I think, affecting the industry negatively is just not enough capacity. And with more capacity, much more innovation. I think the areas of innovation, there's kind of like the normal innovation that Matthew's characterized and that Betty's characterized. That's the most important part, which is the constant evolution of the existing products to analyze risk better, to really simplify the messaging around what customers are really buying. And then there's kind of the revolutionary type of new innovation that would be around like a cyber E&O product or a cyber marine product or a cyber D&O product or distribution through cybersecurity firms rather than through brokers, or different types of ways of selling these products that have better customer channels.
Thanks, Paul.
But that all starts with needing more capacity in the industry.
Thank you very much. So we got some great questions from our audience today. Let's take some of these questions. So first of all, thank you, Ayaz. Question from Ayaz. I'm going to direct this one to you, Matthew. Ayaz asks, what is the mechanism to use stress tests? How do you stress test cyber risks when data on cyber risks is still comparatively lacking? It's a great question. How do you test your risk exposure and benchmark your risk exposure?
So it's a really good question. I mean, one of the things where again security ratings is kind of coming into space here is we store this historical data over companies, and this is what carriers are particularly interested in, is that they can test the assumptions of our modeling against the cyber risks that we're seeing and what's actually causing breaches there. So again, historical data is becoming more and more key to permit us to, let's say, run those type of stress tests or across the models there. Again, and as I mentioned earlier, one of the things that we see more and more is the desire to get more detailed information about product types. So we've just recently started collecting IoT devices, things like cameras, right? So that's the next step to go look at, is additional attack vectors, right? Because we want to understand where do those concentration risks sit across an organization that could be exploited, right? So again, historical data will provide us that capability to stress test the assumptions of the cyber risk.
Thank you. Thanks. Next question from Natalie. Thanks, Natalie. And I'm going to direct this one, if I may, Betty, to you. I think this is actually picking up on your earlier observation around how carriers are partnering with specialists to build expertise and to bring in that external specialist expertise for cyber. Natalie's question is, could it be possible for carriers, for insurers, to build their own and ultimately have their own specific expertise in-house?
Sure. I mean, there are a couple of startups that have actually based their business proposition on that model itself. But I think when that happens, you run the risk of becoming a technology company versus an insurer. And there's a fine line between doing that and until there's a little bit more standardization in some of these rating metrics. Everybody, obviously we love SecurityScorecard. We think they do a great job. We partner with them for a very long time. but there are other rating companies out there, and they all kind of have their own secret sauce. And as an insurance person versus a technology person, how do I know what's in the secret sauce? And just to kind of follow up on Matthew's comment earlier, the data will help us, and that is something that we've been lacking as an industry. And I think collecting data, continuing to cull data and analyze the data is something that's going to help us on a going forward basis.
Thanks, Betty. Let's take a question from Stephen. Thank you, Stephen. I'm going to direct this one to you, Paul. You mentioned a number of sort of bigger socio-cultural economic trends that are influencing the marketplace, and Stephen's raised another one. Stephen's question is, will the increase in people and companies investing in cryptocurrency cause an increase in cyber risk?
It actually, so yes, it causes an increase in cyber risk writ large, but because most of that activity is uninsured, it's a little bit of a free lunch for the insurance industry. So arguably, one of the reasons that cyber insurance was so profitable in 2016, 2017, 2018 was that most of the attack space was focused on, getting people's coins, and less of it was focused on disrupting, power plants and charging them ransom. So, as that becomes insurable, it'll affect the insurance space, but most of it is uninsured right now. So it represents cyber risk, but it does not hurt the industry right now. It helps the industry. It defers them over to that.
Very interesting. I'm going to take one more question. Thank you to Mel for this question. I'll open up to all of our experts, whoever wants to take a crack at this one. Mel asks, to our knowledge, what has been the worst that has happened to a client where a ransom demand has been made and the payment was refused? Who wants to
Well,
answer that?
I mean, I can start off. To our knowledge, I mean, it's not really a kind of a headline grabbing event, but we certainly did have a situation where ransom was refused, and as a result, the criminals, what they were calling doxing, so took the information and publicized it, and then that kind of triggered a whole bunch of regulatory notification requirements and things like that. And there's actually been an event where the payment was actually made and the information was doxed. And so then that triggered the regulatory coverage. There's the forensics kind of component to it. And then, this one situation was a hospital providing COVID care to a big community in California, and ultimately had a business interruption loss as a result of this big ransomware event. So it's a very traumatic situation and costly.
Thanks. I think about all the time we've got for questions. I'm so sorry if we didn't get to your question. Let's just come back to our experts now in the time that we have left. I'm going to ask, firstly, Betty, then Paul, then Matthew, to leave us with their sort of final thoughts based on this fascinating discussion we've had today about the future of cyber and what insurers have to do to get on top of this rapidly evolving market. Over to you, Betty.
Thanks, Stephen. So I'll actually kind of underline your polling question as a key takeaway for me. So, both a vertical and a horizontal segmentation of cyber, and it's got to move more towards the horizontal realm of things. Cyber is definitely a peril, and it can't be, a cyber risk insurance policy can't offer all things to all people that a cyber event can cause. So there are going to be some things, potentially ransomware, that the market is going to deem uninsurable. And a secondary to that key takeaway, I'll say, organizations need to get a little bit more diligent and take more responsibility for their own cyber hygiene, and recognize that it is not a completely outsourced function of their business.
Thanks, Betty. I'm just going to call out Mel's comment. Thank you, Mel. I think this summarizes it quite nicely. Mel says the standalone vertical is data breaches and ransomware. The horizontal is old risks manifesting in new ways. I think that's quite a nice way to put it. Thank you very much, Mel. Thank you very much. Over to you, Paul. What's your takeaway?
Yeah, I guess the takeaway is that this is an incredibly important area of the economy in general, that insurers are much more like investors than they are like CISOs. So we're looking at similar metrics on individual companies, but we're not looking at the metrics that you would use to manage a company per se. We're looking at the metrics that give us signal about how risky those companies are, and then we're allocating capital to those companies appropriately. So we need a different type of analysis, and it's a much higher level type of analysis. I think that insurers have, insofar as insurers have civic responsibility, I think it's to support this area, and it's to find a way to get more capital into this area, and to be a little bit more aggressive about understanding the global economics of cyber risk. It's, the scariest thing that you can say about cyber is always that it's a complex, adaptive risk, that it's sentient, that it's constantly getting around your defenses. But that just means that it's an economy, right? We measure human activity all the time. And so we just need more capital. We need more innovation. We need to be up to the task of evolving with this peril.
Great recap. Thank you, Paul. Matthew, you have the last word.
I know this is probably, it's not the sexiest of things. However, it will all still come down to education at the end of the day. We're so obsessed with technology. When we look at policies, right, we're looking at risk transference. The thing is that we still see that 90% of attacks are phishing related, right? So we know someone is still going to click on that link or that attachment no matter what, right? And the most effective tool that we have as industries, whether we're in cyber insurance underwriting, whether we are cybersecurity providers, is education of the market, right? Only through that education do we eventually get to a point where those policies become understandable and sensible for customers. And it also, let's say, decreases our risk exposure as carriers, but also us as cybersecurity providers, right? We're also interested in how do we reduce the amount of breaches that occur there. So education, I think, is still the biggest takeaway, whether you're that insurance provider or you're that cybersecurity player.
Thanks, Matthew. That's all the time, unfortunately, we've got for today. I want to thank all of our panel, all of our experts for their insights. Betty Shepherd, Great American Insurance Group, Paul Guthrie, Envelop Risk, Matthew McKenna at SecurityScorecard. Tune in, same time next week. We're going to go from one fast evolving ecosystem to another rapidly changing ecosystem. We're going to be talking about mobility, same time next week. Mobility claims and the needs of speed is the topic of next week's webinar. Thanks again to our experts, and thank you for dialing in and tuning in today. I hope you've enjoyed it. See you soon, and enjoy the rest of your day.
Thank you.
Bye-bye.